Denmark, we are under the European regulation, which is the Irish Central Bank, which is very important. When you start trading, it's challenging enough. So to spend a few moments to choose the best broker for you and to choose the best account, platform, and a trading way is well worthwhile. And then you can, on a clear mind, start trading without having to worry about anything else. What we offer. Most of you have the Avatrade account. And today we will go over the Avatrade platform. We have several options there. We have the web-based platform. If you're using a Mac computer, the web-based platform is a very good option. However, if you can download it, that's the best one. It has really nice charts, and it's one of the most user-friendly platforms, as you will come to see. There are also platforms for the mobile phone, so you will always be able to check the rates and do trades. You won't be out of touch. About the login and our services, I'm touching on these points a bit because many of you have had contact with us, so I just want to quickly go over. Our website is a place where you can log in. You can log in with your email address and your password, and this is a place for you to sign up more accounts, upload your documents directly to our server. There's no need to send anything by email. You can add money and funds into your account. You can make withdrawals. So that's a place for all this handling of this part of your account. Now, to log into the actual platform to start trading, you need the account number and the same username you have created yourself in the beginning. What is good to know once you start trading, and if you have any questions or any issues regarding this, we have support here 24 hours a day while the markets are open. Now, this means from Sunday evening to Friday evening. During the weekend, we all can rest a bit and not think about the markets. But otherwise, it's good to know that if there's anything urgent or you need some assistance, our support is here. You can contact them by chat or by phone or by email. And you also have your appointed account manager that will be able to answer any of your trading questions or anything slightly more complicated. So you have a person here that will look after any of your interests. Now, I will säga vi också har support här i svenska, inte dansk men svenska. Så om det är svårt att prata eller skriva på engelska, vad problem eller någonting, så ni kan alltid skicka frågor också på svenska. Det finns inga problem med det. Vi har också en svensk hemsida nu. Det finns mycket material där. And now I will hand over to Sean, who is our director of sales, and he's the market expert, so he will let you know about the platform. Thank you.
All right, so as Natalie already said, my name is Sean, and I'll be going over with you over some basic trading terminology and some trading, how to trade basically, and also how to log in and how to use the platform in a more efficient and good way. So we'll get started in 1 second. Do you have any questions in the meantime? You can always ask them in the question box as well. I'll use them and check frequently to see if there are any questions, and I'll try to touch up on them as much as I can, obviously. All right. So as you already know, there are a lot of things you can trade here with Ava for all kinds of currency pairs. You see here the main ones, but obviously we also have the local pairs as well. Stock indices, commodities, individual stocks, ETFs, bonds we offer as well. So there's definitely enough for you to trade. And it's not really limited to only FX or only commodities. Now, how does the trading itself work though? Let's start with the basics. Maybe a lot of you already know this. I won't make this long. I just want to make sure that everybody is on the same level and we all know what we're talking about. So when we're trading currency pairs, okay, basically we're trading one currency against the other. And each currency pair is also recognized by a 3-letter code. As you can see, the euro is EUR, the USD, the US dollar is USD, etc. Okay. Now, currency pairs are always traded in pairs. Now, what happens if you're buying or selling the euro dollar? You're always buying one pair against the other. So if we're buying euro dollar, we're buying euros and we're selling dollars. And if we're selling euro dollar, we're selling euros and we're buying dollars. Now the buying or selling always reflects what we want to do with the base currency, which is the primary currency, which is the first currency in the pair. So euro dollar, the euro is the base currency and the dollar is the secondary currency. Now, when trading, we also deal with pips. Now, that's how we monitor the currency movements. Now, a pip is basically the smallest change in the currency price. Now, this is not actually really true because on our platform, we offer 5 digits, which means that we also show the fractions of a pip or a pipette or a point. Okay. So if you can see here, for instance, the euro dollar, if it's 1127 after the dot, okay, this is the pip. Okay, it moves to 7 to 8, that's 1 pip. Now, if it's 270, okay, to 271, that's 1 pipette or 1 point. Okay, so it takes 10 pipettes or points to make 1 full pip. All right, so it's a fraction of a pip. That's what's really important to understand. In most platforms, you also see the 5th digit, so the point or pipette as a smaller digit because it's only a fraction of a full pip. Now, when we're trading, okay, we're also trading with leverage. That means that in order to trade, you do not need the full amount of what you're trading, but you need only a fraction of it. Now, for instance, on the euro dollar, okay, the minimum position size is 1,000 euros. So we're either buying or selling 1,000 euros. Now, because we're trading with leverage, you do not need the full 1,000 euros, but only a fraction of this. Now, on the Avatrade platform, which we will deal with in a second, okay, the leverage for Forex is 200 to 1. So what does this mean for you? This means that in order to trade the minimum position size of 1,000, okay, it requires only 5 euros in margin. Okay, so with 5 euros, you can open a position worth 1,000 euros. Now, it's very easy to know what the margin is because or the leverage is, you just take the amount that you want to buy or sell, let's say 1,000 euros, and you divide it by the leverage, which is 200 to 1 on the Avatrade. So 1,000 divided by 200 gets you 5 euros. So if we're talking about a different currency, okay, and then it's exactly the same. So GBP USD, for instance, would be 5 pounds because the margin is always calculated in the base currency. And we earlier said also the base currency is the first currency in the pair. So Euro USD, margin is 5 euros. GBP USD, the margin is 5 pounds. Okay, that's very important to understand that. Now, another factor what's very important is the spread. Okay, that's basically the difference between the buy and the sell price of any instrument. Now, the spread typically on the euro dollar is 3 pips. Okay, that's basically the cost that's what you pay basically to open that position. There are no further costs. There's no other commissions or anything like that to open a position, and it's obviously only paid by opening the position. Now, what is important to understand is that obviously the cost also changes. The amount of spread does not change, but how much the spread is in total, how much you pay, depends on the position size as well. All right, so for a minimum position size, okay, each pip is worth obviously less than for a large position. Okay, that's very important to understand. So for instance, on the euro US dollar, the 1,000 euro position, okay, would only cost you 30 cents. But on a $10,000 position, it will cost you 3 euros. Okay, I think that's understandable how that works as well. Are there so far any questions regarding this? Okay, so one important aspect and to understand also is that in principle you're not able to lose more money than you invest. Okay, so if you invest 1,000 euros, the worst that can happen is that you lose to your 1,000 euros. All right. So at the end, I'll also send you the recording of the webinar and also the slides, so you can review everything by yourself. Obviously, if you have any questions at the end that did not get answered or it came up afterwards, you can always contact us. I'll give you also my email address later on, or general support, and they will handle the questions or refer to your account manager as well. So that's not a problem at all. So regarding the position size, okay, that is something you decide when you open a position, and we'll do that later on as well on the platform live. You decide how big a position you want to open. Now you have to calculate yourself though how much margin is required of you. Now it does mean though that you can obviously open a large position, okay, with less money. So if you have only 1,000 euros in your account, you can actually open positions worth 200,000 euros. Okay, so that's something very important to grasp and to understand that. So the options are basically limitless because you have a lot of buying power in the market. Okay, so let's move on to the actual trading, how we can trade. Okay, so there are different types of orders. Okay, and again, we'll go over them in the platform as well in a little bit. So the first is a market order. The market order means that we're going to enter the market straight away at the current market price. Now, an entry order, as it says already, it's in order to enter the market at a future price. So let's say we're not comfortable entering a certain position at the time, but we want to wait for the price to move to reach another, let's say oil, for instance. Okay, a lot of people are all the time talking about crude oil at the moment because it's very popular and there's a lot of movement going on there. Okay, so if we look at the price of crude oil right now, okay, it's around 36.34. Okay. And let's say I only want to get into the oil market when the price hits $40, okay, because then I think it will go higher. So I can put in an entry order at $40, and then whenever the market reaches $40, only then my position will get executed, and I'll open an actual oil position. Now, a limit order or take profit order is in order it's an order to automatically close your trade when it reaches a certain profit or price. Okay, so that way you don't have to be in front of your computer and check the platform constantly to see if you're getting a profit or not, because sometimes the price might spike up, okay, in your favor, and then go down again, and then you lose your profit basically. Now with a limit order, you make sure that if your trade hits a certain profit, it actually gets closed at that profit, and it won't just go up and then down again, and then when you look at your computer, you say, 2 hours ago I would have made a nice profit if I would have closed it then, but now I'm in a loss again. Okay, so that's what a limit order does. Now stop loss does exactly the opposite. It basically prevents you from making further losses on this trade. Okay, so you can set a stop loss to say I want to lose only 25 euros or 50 euros or 100 euros on this trade. Now when your trade reaches that loss, the position is automatically closed as well. Okay, so the stop loss is also to protect you. And based on that principle, we also have a trailing stop, okay, which is a little bit more difficult to understand. So I'll get some more into details about the trailing stop as well. Now, basically, what a trailing stop does, and you can see that on this slide and the next slide as well, is it works as a stop loss, but it moves in your favor as well if the market moves in your favor. Okay, so in this example, for instance, okay, we have a buy order on the euro US dollar. Okay, that means if we buy, we expect that the first pair will go up. Okay, if we look at the chart, we expect it to go up. When we sell, we expect the chart to go down. Now here we have a buy order on the euro dollar at 50.50, at 150.50. Okay, right here. Here's when we place the buy order, okay, with a trading stop of 50 pips. So the stop loss is put at 50 pips, okay, at 1.5, but it's a trading stop. What happens now? The market moves in our favor, okay, we open it here, okay, it moves all the way up until here, okay, up to 1.5150. Okay, that's a 100 pip profit. Now, because we set a trading stop, the trading stop moves up to the highest position with a gap of 50 pips. So it reaches 1.5150, and the trading stop is here, 50 pips below the highest point. And we see that the market crashed afterwards. Now, because we have the trading stop right here, we get close at a 50 pip profit. If we would have a regular stop loss, okay, we would have been closed right here. Okay, actually right here, 1.5. So at a loss. So because of the trading stop, we actually gained, we made a profit, and we actually capitalized on the market move in our favor. Okay. I hope this is understandable. If not, please let me know and I'll elaborate a little bit further. Okay, so first of all, it doesn't matter in cost. Listen, it doesn't cost anything to put a stop loss or a trading stop or a limit order or anything like that. Okay, so you don't pay extra spreads or commissions or something like that. These are just tools for you to use in order to trade better and make more profitable trades and protect yourself as well. Okay, so that's difficult. This is important to understand. Now the stop loss and trading stop basically are the same. When our market doesn't move in your favor, it works exactly the same. The trading stop only works in your favor when the market also moves in your favor. As we can see again, let me go back on the slide. Okay. We open the order here at 1.5050. Okay, here's where you open the order, and we put in a trading stop 50 pips below that at 1.5. Now, if it's a regular stop, the stop will stay at 1.5. It will not move. Okay, so it won't go up or down. It will stay at 1.5. But with a trading stop, it trails basically your position by 50 pips, because you opened it here. Okay, the original stop was here, 1.5, right, 50 pips below the open order. So at that time, basically our stop is at a loss of 50 pips. Now, because the position moved in our favor, because we have a buy position and it moved up, which is good, the price moved from 1.5050, it moved to 1.51. Now at this time, our trading stop moved up to 1.5050, our original order price. Okay, meaning that at this point, our trading stop is at a break-even level. So no matter what happens now, we have not lost money on this trade. Now, because the price didn't stop at 1.51, it moved even higher until 1.550, meaning that our new stop, because it's a trading stop which trails our best price by 50 pips, is now at 1.51 right here. And now when the market moved down, we get closed down here because this is the price of the new trading stop. Okay. Now, because of the trading stop, we actually made a profit of 50 pips. This is what we made. Now, with the regular stop, it would still be right here at 1.5, and we would have made a loss of 50 pips. So the difference, the net difference between having used a trading stop or a regular stop in this case is 100 pips. Instead of a loss of 50 pips, we gained 50 pips. Okay, so all this is profit made because of the trading stop. Okay, so I hope this is more understandable right now. Okay, if not, feel free to come back to your account manager later on, and he or she can explain it to you later on as well. All right, so let's move on, okay, to how to actually know how to trade and what to do. So no, 1 second, a trading stop cannot move down. It will only move in your favor if the market trades in your favor. All right. If it doesn't move in your favor, the market, the trading stop will act as a regular stop loss and will not move. Okay. So that's definitely important to understand. Okay, so there are a few questions. Why use one stop and not the other? Okay, because sometimes, that's also why we're getting there now with technical analysis. Sometimes you don't want to put a trading stop on each and every trade. Sometimes you prefer placing a stop loss at a certain price based on technical analysis. Okay, that's what we're gonna touch upon right now as well. Okay. So I hope those questions will be answered right then. So yeah, listen, there's always a risk of using a stop loss, okay, because it could have gone more in your favor. But in the end, this is a trade-off you have to do. Do you want to make sure you won't get a larger loss? or do you want to maximize your profit? Now, from my experience, it's very, very important to minimize your losses, okay? And accept the fact that we're never going to have we're never going to hit the tops, okay? We want to guarantee that we're not losing out on our account on a certain trade and wipe our account out, okay? It's better to lose 50 euros on a trade than waiting and see that trade turn into a loss of 100 and 250 and 500 euros. So that's where the stop loss comes in, okay? It protects your account from having one trade causing you a large loss in your account. Okay, that's why the stop loss is very important. Okay, well, let's move on. Okay, again, if you have further questions that are not answered, you can always contact us at our support team or your account manager. All right, so this is definitely not the end of it, and feel free until you have a full grasp of what everything means. Okay, so there are different ways to look at the platform. Okay, and we're going to move to the platform very quickly as well. Okay, actually, we're going to move to the platform right now. All right, so it'll be a little bit easier for you to understand and see everything. Okay, if you can see the platform right now, please click OK again in the question box. Okay, good. So this is basically the trading platform. Okay, I hope most of you, if not all of you, have already been able to log in. If not, I'll go over the login in a second as well, okay, which should not be too complicated. Hold on one second. Okay, so this is basically the platform, all right. And you can see on the left side here, okay, we can see the different instruments here, okay, the sell price, the buy price, high and low, and also the spread, okay. Now, if you only want to trade certain instruments, okay, you can choose yourself what you want to do. Okay, you can customize the whole platform as you want yourself. So if you right-click here, for instance, you go to Preferences, Settings, and right here you have all the instruments, okay, that you can trade, and you can decide yourself if you want to see. If I don't want to see Bitcoin weekly because I'm not interested, I'll make it invisible, okay, and you can see that it disappeared here, okay. So if you're only interested in a few instruments, you can do that. Let's say I don't want to see all these. I'll just take them out, press OK, and they're all gone. Okay, so if you're only trading 5 instruments, you can have 5. You can have 5 instruments here as well. So that's not a problem. Okay. Now, for those of you using the Mac, okay, there is a web version, okay, on the website, which you can use, okay. I hope we'll have some time to touch upon that as well in a little bit, okay. If not, we can do another one-on-one session, maybe with your account manager, and but it shouldn't be an issue, okay. If you go on the website, go to trading platforms, and then Mac trading, and then you have the link there to use the web trader. Okay, you can trade all the instruments there as well, but the basic principles are exactly the same. All right, so let's say we want to trade the euro dollar. Okay, now first let us open a chart of the euro dollar. Okay, open chart, euro dollar. Let's do a 1 hour chart. Okay, here we go. So now there are different types of charts as well. Okay, you can have a candlestick chart, which such as this. You have a bar chart, okay, or even a line chart. So whatever you prefer. However, the most common chart that is used is the candlesticks. Okay, this is the most widely used type of chart. Now, how do we usually trade? Okay, there are different ways. Okay, well, the most common one is technical analysis, which I've mentioned a little bit earlier, and this is done by actually looking at the chart and analyzing the chart because it's basically based on history. Okay. We look at the chart and we can identify prices which come back and we see the same pattern occurring again. So for instance, on this chart, okay, we're able to see some kind of pattern around this area here. Okay, every time it reaches these levels, more or less, okay, we see that the price moves back up again. Okay, so we call this line a support line. Okay, now mind you, I'm not drawing very exact ones, so whoever's familiar with this, don't get upset. I'm just giving this as an example, all right, to quickly draw support and resistance lines, okay, for analysis purposes. So we can see that around this level, okay, we can see that the price goes down and then it moves back up again. So this is a support line, okay. So when we go back and see what we mentioned earlier regarding the stop loss, if we're in a buy position, okay, around this area here, okay, around the support line, a little bit below it would be a good point to put in a stop loss. Okay, because usually what we see when we see a break of the support line, we see a further move down. Okay, that's what we usually tend to see. Okay, so for those who ask why not use a trailing stop every single time, it is precisely because of this. Because you want to know when it is likely or most likely that the price will go down and bounce back up again. Okay, now on the other hand, we also have a resistance line, okay, which is exactly the opposite of a support line. Okay, this is an area where we have trouble breaking through. Okay, so right here, more or less, okay, we see that the price is trying to go above this level. It's not successful. It moves down a little bit, moves up again, not successful, and almost another attempt and not successful. Okay, so basically we can see that the range is between these two levels at the moment. Okay, now when we're looking at the 1 hour chart on a candlestick, okay, it means that each bar represents 1 hour of trading. Okay, so when you see here, this is one opening at 10 o'clock. The next will be from 11 o'clock. 1 second. You see here 11 o'clock. So each bar represents 1 hour of trading. Now if we change this to 4 hours, then it's, again, each bar is 4 hours. And again, we see here the same support and resistance lines as well. Okay. Now we have all kinds of different types of lines as well. We have trend lines, okay, which is more diagonal lines. We've got channels. Let's see. There was one for 1 second for crude oil. Okay, we could see a channel right here. Okay, more or less was like this. Okay, and another one so you can see it more clearly. Again, I don't draw them that precisely at the moment. Okay, just so you understand more or less what I'm talking about. You see that it was trading around this level all the time. Hit this level, bent up, hit it again, went up, hit it again, went up. Right here it broke below, and we see that it moves further down. Okay, again here is this the resistance, moved up, didn't break, didn't break, didn't break, didn't break, and didn't break again, but it broke down below. Okay, so these are just basic principles of analyzing a chart, okay, based on some very simple lines you can draw on the chart. Okay, now besides that, there are all kind of different indicators that you can use as well on the chart. Okay, you can find them by pressing the FX button here, set up the indicators. And you can find here a whole list of different indicators that you can use. Okay, there are all kinds of different ones. When you apply them, you can see them here on the bottom of the chart. And again, there are literally dozens, if not hundreds, of different indicators. Okay, there is not one good or bad indicator. It is all a matter of personal preference. Okay, so you have to find out which indicators you like and you want and work for you. Okay, that's what's important to understand. All right, so you can also change the colors of whatever you want. All right, that's not a problem. You can change the background colors in the settings. Okay, so you can have sounds on, off, colors, fonts. Basically, you can change everything you want. Okay, so you can do everything you want. You can customize it as you see fit. Now, how to open a position? We can just click on it. If we want to sell euro dollar, okay, we get here the order screen. Okay, it says you will be selling euro dollar, selling euro, buying dollars. Okay, this comes back to what I said also earlier in the webinar. All right, that we always do what we do is to the base currency, and we also always trade two currencies at the same time, buying one and selling the other. Now here's the amount is 10,000. Okay, but let's start slow with the minimum trade size. Okay, which is 1,000. All right, click OK, and we can see that we open the position right now. We're always starting minus because of the spread. Okay, and we can see here as well that the used margin is 555. Okay, and that's what you see, the used margin. Okay, you can see the usable margin, what you still have left. You can see the equity, which is your balance plus minus your open position, and you see your balance here as well. And right here in the bottom, you see your net P&L, your net profit or loss. Okay, now let's put in a stop loss. Okay, so let's first open the charts of the euro dollar again. So as we said, more or less, we see some support here. Now, the good thing about the stop loss is you can put it either in amount, as in how much money you're willing to lose on a certain trade. Okay, so let's say 11 euros, or the distance in points of the current market price, or an actual price of the instrument itself. And then you see that everything will obviously change accordingly as well. So if we want to put in a stop loss at 1.0, 1 second. 0.500, you see that the projected P&L will be a profit, okay? Because this is this, but we won't be able to execute this position, okay? Because we're in a sell position, okay? So it will change automatically, okay? Because we're in a sell position, the stop loss will be above the current price. Because if we're in a sell position, we want the price to move further down. Okay, so let's say we want to lose only 5 euros on this trade. So I'll put -5. Okay, and we can see here the stop loss is there. Okay, we can also see the proximity, how far we're off, because this is a future order. We can see how far we're also off of hitting the actual stop loss. Okay, one moment, please. Okay, so it appears there's some problem with the platform. Okay, so I'm sorry. Let me continue the webinar without the platform for a second. Okay, and we can reschedule if anybody still needs to go over the platform, how everything works. We will reschedule one very soon. Okay. You can also buy and sell from the platform as well. All right, so that's definitely possible. So that's not a problem. Now, when we're trading, okay, it is also important to understand and to know how to trade. All right. Now, as I said earlier as well, the leverage, okay, it's important to understand that if you're opening the minimum trade size, you're only using actually 5 euros of your margin, okay, in case you're opening a euro dollar position. Now, if you're opening a 10,000 euro position, you'll be using 50 euros in margin. Now, this comes into play when we're talking about risk management and psychology. Now, it's important to understand that you don't want to over leverage your account. You don't want to over leverage yourself. This means that when you're trading with 1,000 euros in your account, you should not, in principle, you should not use more than 10% of your balance in margin. So that means that we should be only using around $100, 100 euros in margin. All right. Now, if it's 125, 115, it's fine, but it's not good. It's not very good to use 25% or higher because the risk you're taking is larger. Because remember that the larger your position, obviously the larger the profit and also the loss will be. Okay, we don't want you to lose the money. Okay, so the first thing is to minimize the losses, and then you want to maximize your gains as well. So therefore, it's very important to be disciplined, okay, and also conservative with the way you're trading. Now, obviously, if you're opening very large positions and the trade goes into your favor, you obviously get a larger profit. But again, the risk you're taking is much larger as well. Okay, so if the trade goes against you, you can easily wipe out your account very quickly. Now, so as I mentioned earlier as well, all right, with Avatrade, it's not only CFDs. Okay, all Forex is spot trading. Gold, silver is also spot trading. Okay, so it's not only CFDs. It is FX, it's commodities, it's indices, it's everything together. All right. Now, again, cut your losing trades. Have a stop loss in your trades because you're probably not are going to be in front of the platform all the time. All right. So it's important to have a plan when you're trading as well. Know how much you're willing to lose on a trade and what your goal is with this trade. I want to risk 10 euros and I want to make 25 euros on this trade. So you can put in a stop loss at 10 at minus 10 and a take profit at plus 25. Okay? And this is how you should be trading. What I see most happening from my experience is that the majority of the trades are profitable trades, but only for small amounts. Meaning that for each euro they make, they're losing 2. So if your profitable trades percentage is 60% and 40%, so 60% of your trades are profitable, but 40 are losing trades, on principle, that's a good statistic. However, if you're only making 1 or 2 euros on your winning trades, but losing 4 to 10 euros on your losing trades, you're still making an overall loss. So that's very important to also analyze your trading and how you do it. So the risk and return ratio should be at least 1 to 2. Okay, putting a stop loss at 10 and putting a take profit at 5 euros does not really make sense because you're willing to lose 10 euros to make 5 euros. I hope that's understandable, that it's not really a good trade-off in risk and reward for such a trade. Now it's possible to trade directly from the charts as well. You can just right-click on the chart and then you can open it as well. So that's not a problem at all. Okay. Now basically we've come to the end of the webinar already. Time flies when you're having fun. Again, because of the issues we have now with the platform as well. Again, it's not a general platform issue. It's just the synchronization with the webinar. All right. So we will reschedule one pretty soon, so we can skip the whole introduction and just actually do some trading on the platform, open some trades, put some stops, limits, and entry orders, okay? And know how to find instruments, subscribe, and some other under issues on the platform. All right. And again, if you have questions, you can always send them also to customer@avatrade.com. That's our general customer service email address. Okay. You should, if you have a funded account or not funded account, you should also have your account manager's email address. And so you can also email him or her directly. And obviously, you can also contact me. I'll be sending also an email out with the recording and the slides at least, okay, of this webinar. And I'll add some extra information there as well, so feel free to contact me as well. All right, if there are any last minute questions. Okay, so basically what we'll do next time as well, we'll touch a bit on the web-based platform, okay, which is more suitable for Mac users as well. And yeah, you're able to set also an alarm, okay, to notify you when the instrument hits a certain price. It is definitely possible to have multiple charts in one view. Again, I'll show that next time as well. You can have as many charts open as you want at the same time. But you should definitely be able to also put in a limit order, basically a take profit, and say how much you want to make a profit. Okay, so that will be it. All right. We have to go. I've already gone over schedule as well by 15 minutes. Again, any unanswered questions, please send them by email, and we will deal with them, obviously, or feel free to ask them next time as well. All right. Thank you very much. Happy trading. Good luck. And we'll speak to each other very soon again. Have a nice evening. Bye-bye.